my win percentage on that stock chart is phenomenal. And I stick to my plan no matter what. I have a risk level before I buy the stock, and I have my entry price, and I risk the same dollar amount every single trade. So I decide how many shares I can have based on that gap between my entry and my risk level. And if I buy that, if I'm willing to click that button, I eliminate my human emotion. If I'm willing to click that button, I am holding that position until it either violates that level or hits my price target.
All right, everybody, welcome back to This Week in StocksToTrade. We have a special guest here, Scott. I'm going to let him introduce himself in a moment. But first, I'd like to take a moment to just give a round of applause to Mr. Kellogg, the $500,000 man. So, hell yeah, man.
Appreciate it, bro.
That's incredible.
A long grind to get to this stage, but just got to keep it going, man.
Awesome. That's so sweet. Yeah, so I'm going to turn over to Scott. He's our special guest today. Just tell us who you are, a little bit about your journey, whatever you want. Go for it.
Yeah. My name is Scott Saylor. I'm 24 years old. I live in California, right near Sacramento. Went to Sacramento State, graduated about a year ago, and have been trading full time ever since. And it didn't happen super fast for me. I've been trading for about 4 years now with very little success in the first 3 years. Actually became consistent on a family vacation to Hawaii, which are terrible time zones to trade in. You're up at 2:33 in the morning to see the market open, and I don't really know what clicked. I just got so frustrated with what I was doing in the process that wasn't working. Something eventually just clicked. I can't even say what it was, but I found a risk reward, and I always knew what risk reward was, didn't understand it the right way, and was able to kind of turn that into a full-on process that I've taken little pieces from Jack, I've taken pieces from yourself, Tim Sykes, Mark Crook, Tim Gertani, huge trading tickers was massive for me. And I've just been able to find some consistency and now trying to, give what I can to other traders. And this is super fun. I appreciate you guys having me on. I'm pretty pumped up. It's been exciting.
Pleasure to have you. Where are you, if you care to share, in your profits? At what point are you? How long have you been profitable?
I have been profitable since September I've been consistently profitable since September, but I finally broke back even in March. Awesome. I had a weird process. I had a weird kind of the upbringing. So from September to December, I was averaging about $1,500 a month. That was the most money I'd been making ever. Super cool, but I knew that wasn't going to pay the bills. So I spent January and February with the goal not to necessarily make a bunch of money, but to kind of just tweak everything, a trial and error period, make it super, just eliminate profits, eliminate losses, just do whatever I need to do to find consistency. And I put it together in March, made about $15,000 that month, and then just been averaging something close to that ever since. I've been profitable since March. I think I'm coming up on I'm pretty close to $50,000 in profits since March, which is pretty cool. I'm trying to stay humble, level-headed. I've gotten into some over-aggression issues the last few days and actually the last week. So I'm trying to get my mind right. But I don't do the Profitly thing. I never did. It actually was messing with my mind too much early on to see the losses adding up, because I knew that's the process. We're going to lose money. But as a 19, 20-year-old kid, it just messed with me so much. I couldn't actually click the buttons. And I'm just kind of a head down grind kind of guy. I don't really use social media a ton. I'll post charts here and there on Twitter, but yeah, just kind of stuck to my own little world and just found Jack in his chat rooms. And ever since then, we've been pretty consistent, which has been really cool.
Awesome, man. Yeah, so going along this theme, Jack and Kyle, do you want to give us just a weekly update, how this week's going for you and what you boys are seeing in this market?
So last week was my best week ever, and we had discussed GNUS last Twist episode, and it came up with a huge play. It extended itself from 4 to, I don't know, like 11 or 12 in a couple of days, and we had a big time short play on that, and me and Kyle really nailed that and really scaled up. We were both telling each other, one of the best setups of the year. So I'm really happy that we were able to execute on such a good play after we had seen INO, APT, APRN, INO, And it was the same exact pattern where we get that massive gap up and stuff move under VWAP eventually, and then just that massive unwind that we're able to capitalize on. And I'm proud of Kyle because Kyle dip bought it with me. I've been working on my dip buys on that pattern as well, because they just offer huge dips when they do crash, these supernovas. So the thing had a really nice dip buy. And this week's been pretty good. HTZ's been my main ticker of the week. I'm already at my new best month, just 10 days in. So it's just a really, really insane market, and I'm just kind of interested to see how the rest of the month's going to play out. I doubt that it's going to be able to keep the market on this level of amount of opportunity that we've had in the market. I don't think it's going to be able to stay, but we will see what it gives us. So that's what I got.
Incredible. What about you, Kyle?
Yeah. Similar feeling about the market with Jack. I'm not at my all best month yet, but considering how it's going, I'm pretty close. It's only been, how many days has it been now? Yeah, like 7-8 days. So for how it's going, between Hertz, GNUS, just two massive plays that really allowed me to execute super well, really pulling a lot of profits. Besides that, in terms of like right now, it seems like we are maybe, I wouldn't say slowing down because it's still insane, but like Jack said, I think we might have to have a little dry period for things to pick up again. I just don't have any expectations. I'm not going to let the first the first 8 days, predict next 3 weeks of this month. So we're just gonna see how it goes, take it day by day. But so far, it's really good. Starting off solid.
Great, boys. We're going to start with some charts. Kyle is going to walk through some listed, and then we're going to have Scott talk about some more OTC plays. So, Kyle, you want to share your screen?
Yep.
So, as we were discussing GNUS last Twist episode, Kyle, move your mouse to the left a little bit. I think it was to the right. It's that gray area, dude.
Yeah, right here. We were talking about right about here.
Yep, so that was the day we were talking about it. And then as you can see, the next day it was looking a little bit weak pre-market, and then the algo or whoever just came in and just absolutely ripped it up. And then I knew, we had a big trade on our hands once it was going parabolic towards $6. Me and Kyle just scalped a little bit on the front side. We had locked in some profits into the massive spike. That's a pattern me and Kyle have been working on, is kind of shorting the parabolics on the front side and then covering down near the VWAP level. So that was really good to short that and just get a feel for the stock. It's kind of the same pattern that I traded UAVS when it went parabolic, except UAVS rolled over after that kind of move where this thing then continued to squeeze even more. And then after hours, it went even higher, and we're looking at around the $8 and $9 range. And then at market open, that's when me and Kyle were able to enter our short positions and capitalize on the drop. I was just slowly shorting it. I actually have the executions on my Twitter. Pre-market, I got chopped up a little bit for a couple small losses. But at the market open, I just slowly was scaling into the morning spike. And then once it made the low at $10 and then cracked the low at $10, that's then where I went full size, risking around that $11 area. And we were very patient on the way down. We did not cover any before that massive gap down. And then we got out all of it into that $5 area. And like I was saying, me and Kyle then bought the dip around the mid fours, and we were selling it back in the sevens for a really nice, 50% bounce and just a few halt ups. I was really satisfied with that trade. And then we shorted the bounce, and the bounce was really choppy. And me and Kyle, we both looked at each other and not looked at each other, but we both were kind of talking like, this is too choppy. And we covered up, and then it just kind of slowly faded off. And I just kept a small position and kind of covered some dips along the way. But that was that for GNUS. Just another incredible opportunity. So much volatility, especially to the downside on that first drop, from about 11, 12 to $4. So really, really cool to witness and trade another awesome runner like that.
I just want to mention this play. If maybe we can link it in the description. We'll see. But there's a video I do about when I talk about APT, CODX, APRN, and this GNUS followed this pattern like exactly to play. Like, you know, every supernova has its first red day eventually, but there's a way that certain supernovas, like the best of the best, have their first red day, and this is exactly it. Halts down, you know, nearly 50% drop from, or more than 50% drop from 11 to 4. Yeah, then the bounce and then the short the bounce. So just a perfect, I guess we call it trifecta of a play on this one. So just super, super cool. Probably one of the best plays of supernovas of the year, I would say. You know, we got 6 more months, but I don't know, you can't beat that kind of a move right there. All right, HTZ. HTZ is another play that we were super interested in because it is a bankruptcy play. Bankruptcy stocks this week were super, super hot, you know, not for any other reason besides that they were bankrupt. I don't know what people are thinking, but that's the kind of market we're in, where literally the crappiest companies are just going up because they're crappy. So HTZ is going from, you know, $1 all the way up to 7. And the reason for this gap down, all the other bankruptcy companies like the oil, I think CHK was the main leader. That one actually faded really hard after hours, but all these other companies were gapping up still. But by the time the morning came around, they all kind of hit reality and they started gapping down. And so I knew at this point, you know, this would be his first red move. This would be his first time holding red in the day. And so shorting into these pops here, risking, you know, the 580 or the 550 level where the red green mark was from the previous close right here, was the idea. And so I started shorting these pops, and before you know, we start panicking pre-market. So I felt really good about it. And then right out the open, you know, it just completely dumps. And I think, you know, this isn't something to really, you can tell, but on Twitter, I just saw a bunch of people who use Robinhood, or people making fun of people who use Robinhood, about how so many people own this HTZ with Robinhood. And I don't know how people find this out, but the point is, it gave me conviction because I knew this was a bankrupt company, you know, up over 1,000% from its lows. And all these retail investors who really don't know what they're doing, own it. So the moment, you know, you can give them a reason to sell, they're going to dump their shares. So that's exactly what happened at the open, you know, pulling from 480 down to 350, covered most of my shares there. And then as this bounce comes in the red green mark, I believe Jack and a few other traders in Sykes' chat room were looking to short this bounce here. And unfortunately it did go green. I actually had to cut it for like a small $700 loss because that was my risk after I had reshorted into this bounce. But once it failed, held, like you see this lower high right here. Once it failed there, I kind of knew at that point, we actually, you know, that was just a fake out to go green. We're actually holding again, and we're going to kind of fade lower. We should fade more. And so I reshorted, faded it down to, I believe, 450. There's a lot of buyers at 450, and you see how these previous bounce tops were around the 450 level there. And so then I covered the rest there. I think Jack played it similarly. If he wants to add anything else, he can, but I think that's pretty much the way I played it. I think that's the way he played it. And unfortunately, we're even lower today. So hindsight should have swung it, but I'm happy the way I traded it. So
a really good first red day there. As we know in every episode, we're looking for that 3-day extension on the daily chart. You know, clean green holds every single day. The only thing is HTZ had a little bit of a red candle one day, so it was a little bit more tricky of a play, but it still ended up extending itself. And when it finally did go red, we got that really nice trade in pre-market and then into the bounce. So really, really, really nice name there. Hopefully more to come. We'll see what happens.
Scott, you want to start with JCPNQ or INT?
Yeah, absolutely. I actually missed this play. So some special guest I am. I didn't touch this at all. So I missed the entire end of day run up, and I wasn't even necessarily that frustrated. I use Thinkorswim. I didn't see the news. I didn't see anybody post the news. So, and I don't like chasing stocks. I'm very, I don't like risking anything. I like money a lot. So if I'm chasing it, I'm not gonna give my money in a bad spot. So I watched this thing go, and I watched it the next day, and it just kept going. I watched that little, you know, swizzle kind of midday on day 2, and I'm just sitting there, you know, ready to jump out my window head first, because I'm like, I can't trade this thing. I can't trade it. So I just watched this thing go for the most part. I tried to capitalize on some, you know, this one technically did take over the sector lead. You can even call the Q tickers a sector. It's more like a weird fad, in my opinion. So I'm looking at MDRIQ, which was running, and I didn't trust that one either. Missed that one completely. I missed every spike that the Q tickers had, and I did nail the JCPenney initial run from day one. It was like the first green day after its massive pull from I think it was 15 or 16 up to the 20s or 19 or something around there. Nothing super crazy. I don't trust these things. I like stocks that have a good history, stocks that I'm comfortable trading, that have great structure.
And then here we go, right here.
That's
16
it.
to 20. Yeah,
exactly. Yeah. So that's pretty. I mean, that is a pretty nice little swizzle there. Especially, I mean, I don't know if it had news or not. I can't remember exactly. I think it had news a day or two after that as well. This was still kind of a tricky stock. I'm a very process-based trader. I try to eliminate all my human emotions as possible. So if I hit a setup, which I don't know who coined the term OT swizzle. I did not. I just use that because that's what you guys call it. But once I click that buy, I have a risk level that I'm using, and I respect that risk no matter what. Those are some characteristics that I learned from Tim Grittani through trading tickers, and I really took those to heart and tried to turn, even some of his short selling positions. I learned a lot from Huddy. You look for as many sellers as you possibly can, whether it's dilution, whether it is toxic financings, anything that you short. I don't know what you guys were talking about. I'm not gonna lie to you. I don't short sell anything. But he was looking for as many reasons for the stock to go down as possible. So I'm doing the same thing on the long side. I'm looking for a solid chart, which is usually a day one, massive volume, needs to have a catalyst ideally, and as many buyers as I possibly have. Usually there's 3 or 4 total buyers. And if they have all those buyers, I still need some kind of structure, which JCPenney did offer some structure. Let's just say that this swizzle was day one. You can take that play over. What was the top of that morning spike there?
50 cents.
50 cents a share, exactly. I mean, $0.50 key psychological resistance, that's great in itself. Pretty easy, risk reward there. You buy it, you probably risk somewhere around the 46, 47 range, whatever that most recent consistent dip level was.
Yeah,
right
46.
there in the middle of the day. There's no way I was going to hold it to 60. I probably would have flipped it, or to 65 or 70. I probably would have flipped it probably pretty quickly. Because I don't trust these things. I take predictable profits and I move on. I don't. Jack kind of put it into good words for me a little while ago. Said that I risk the least amount of money to make the most amount of money, and that's pretty much how I do it. I don't like risking a lot of money. I risk the same dollar amount on every trade, and I look to make a pretty similar profit on every single trade. Some are home runs, some are singles, some are quick flips, just depending on the price action. But I don't actually have a ton of tickers to talk about this week. I've made almost no money. I just kind of break even.
So Scott, could you briefly touch on your process, what you look for every single day, and kind of how you go about your specific trading style?
Yeah, absolutely. Every single night I make a watch list. Typically that's the best technical chart patterns in the market. Those typically come with massive volume, some kind of news catalyst, some massive spikes that were very clear cut, easy, possible supernova type of plays. I learned a lot, like I said, from Huddy when he looks for all of his different reasons for a stock to go down so he can short it with more conviction. I do the same exact thing. I have 4 types of buyers that I look for. I look for the news catalyst to be there. I call those guys the news chasers. I'm looking for a specific pattern, whether it's a first green day or a breakout of some kind, because people love trading technical analysis. That's one reason for somebody to buy. The third one is short sellers covering. Now I know we trade really low price stocks from sometimes a penny to 5 pennies. There's not a lot of short sellers in those stocks, if any at all. So I just kind of assume that would, if there is a short seller, they're probably going to be covering their position. And the last one is the 90% of people that chase stocks. To determine that one, it has to be a big percent gainer with the typical Sykes requirements of 10% gain, at least 1 million shares in volume. It's got to be on that main basic percent gain scan. And those are my 4 buyers. If I can get all those on a first green day and a breakout on a great chart, my win percentage on that stock chart is phenomenal. And I stick to my plan no matter what. I have a risk level before I buy the stock, and I have my entry price, and I risk the same dollar amount every single trade. So I decide how many shares I can have based on that gap between my entry and my risk level. And if I buy that, if I'm willing to click that button, I eliminate my human emotion. If I'm willing to click that button, I am holding that position until it either violates that level or hits my price target.
How do you come up with price targets?
How do I come up with price targets? I trade like to keep it PG. I trade like a Sally. I sell very quickly into spikes. I sell a small piece. I've seen people sell, 1/10, 1/15, 1/8 of their position. I don't necessarily do it like that. I might sell a quarter. I might sell half of my position into a spike and then, let it kind of play out. So let's say like JCPenney right here. Let's say this is day one right here. I'm buying it at 50 cents a share, risking 46 cents a share on my initial run. Is that about right? Or is it 47? Yep. 40. Let's just say 50 for simplicity's sake. As soon as that thing spikes up to 55, 60 cents a share, I'm going to be selling a piece. That's an obvious. Always sell in the spikes. Doesn't matter if you were too early or too whatever. Doesn't matter. I don't even care what price I get executed at. I just want to get some shares off. I also move my risk level up at that position because I don't want to go underwater. I don't want anyone that bought that breakout, which typically would be the 90% of people. I don't want them to be underwater. I don't want to be going against those people. And if the 90% of people is underwater, it's going to be hard for the top 10% to be making money because those guys are panicking out. And that's where I don't, that's why I sell quickly and move my risk levels up and position size accordingly. And moving your risk levels up, selling pieces into strength actually allows you to add later on if the stock continues to develop and goes, higher to 75, 80, 85, 90. This one kind of, I think, topped out, was it in the low 70s or did it even get to the 70s?
Yeah, high 60s, 66, 67.
Yeah, I just didn't have the juice, and I didn't really trust the Q tickers because I have no history of really trading these. Bankrupt stocks spiking big is kind of weird in my opinion. That's not something I'm super used to. So I'm very simple, very cautious. I don't go super aggressive, and that's why I've struggled the last actually 2 or 3 days. And I had one of my best weeks last week. I made a little over $7,000, which was great. And now to this week, I've made about, $12. I've literally made no money. And my mind is actually, I'm doing okay with that. I'm okay with that because I only trade one pattern really, and it's OTCs that are showing strength on day ones, whether it's a breakout or first green day. I learned a lot just by listening to you two talk about these shorts, which was super cool. I can't wait to get into short selling. But I just stick to my process, do my thing, keep my head down and kind of grind it. I think I'm coming up on 50,000 shares in profits. And I really don't care personally about 50,000 because I know that, I'm a baseball coach, I'm a baseball player. Your last at bat doesn't mean anything. Whatever happens today is what means something. And that's kind of the mindset I took every single day. That's why I stayed away from Profit League because I just couldn't I kept mentally focusing on the losses. So now when I'm winning, I'm trying to keep myself in that same mindset. Don't focus on the wins, just keep focusing on the process, and it yields me a good profit in the end.
That's awesome.
I love how you talk about the thinking about where the 90% are going to be, because if you're with them, you're going to have the same result as them at the end of the day. So I like that a lot. Thinking about where they're going to be.
I spent a lot of years being a part of the 90%, and you have to be a part of the 90%. Right. And I think I was a little bit slower than most, but I'm usually in nowadays before the 90%, and I'm selling into the 90%. And my goal is, I mentor a small group of people. I love teaching. I love coaching. And the biggest thing that I've seen from them is that they have the wrong expectations. They're buying at the wrong prices. They're not willing to get in at the right prices. They're not willing to stick to a risk level. They're trading very emotionally. I'm trying to de-emotionalize them, or I don't know how to say that in a very sophisticated way, but I'm trying to get them to get rid of their emotions and just focus on a process. And that's been they're taking C+, B- setups and expecting A+ results. And that's where I think that kind of represents a good amount of the population, especially new traders, is they got the wrong expectations. There's no bad trade. There's only a bad mindset. JCPNQ, if I was going to sit here and try to trade it to $1, that's a bad mindset, in my opinion. I don't think JCPenney is going back to $1 anytime soon, but I can easily take the predictable 10 cents a share. And if that's what the market's going to give me, I'm happy with that. I'll take my 500 to $1,000, or in your position, maybe you're making 200 to 300. That's fine. But predictable profits, safe profits, that's what builds small accounts.
Mm-hmm. Totally.
You're super disciplined. Are you just naturally super disciplined in life, or is this something you've kind of learned through your trading journey just so far?
That's a tough question to answer, because I don't actually look at myself as 100% disciplined. I actually kind of made it a goal in 2020 to be a little bit more disciplined in the things that I was doing, whether it was fitness, healthy eating, sticking to something kind of plan. I was kind of all over the map doing too many things. So I go straight from the market, I eat lunch, I go coach baseball, and then I'm exhausted all night. I get home at 7, 8 p.m. and I'm tired. So I needed to find a way to balance this a little bit better. So I kind of combined trading and just life in general, sticking to what works for me. So I definitely have some characteristics where, I am disciplined in life, but I've really tried hard the last, 3 months or so to really be more dedicated to trading and more disciplined in the fact of, if I'm willing to click that button to buy, I better be willing to hold for that loss. And if I'm willing to click the button, I better be willing to take a loss. I'm totally fine with good losses. I took a good loss this morning, actually. I forget what ticker even was. That's how fast they get out of my brain. I just don't focus on the last at bat. I just don't think about it. It's me and the pitcher right now. Let's just nail it the way I know how to nail it, and that's about it. But I appreciate you saying that. That's very nice. That's something that I've really focused hard on getting better at.
Good for you.
You guys are disciplined.
There's some really good sound bites in this episode.
Something I was thinking about, Scott, was when you said you solely removed listed and just only trade OTCs. That's definitely what I had to do starting, when I first started to become profitable. I literally shut out NASDAQs for over probably a year. Until I realized I need to like this last summer when it was really slow and I had to kind of force to learn listed. But I'm wondering if it helps the viewers at all to understand like how, because we obviously had a similar routine where it's like we had to cut out everything. Maybe you want to talk about how you figured that out for yourself and then stuck to it.
Oh man, I could talk mindset all day long, because that's how I've become profitable, not anything to do with trading style. So this is actually a very challenging thing for me, was swallowing my pride and just giving up the dead weight that I was not good at. As an athlete, as a competitor, I'm super competitive. I hate losing. I felt like I was getting beat by listed stocks over and over and over again. So that just fueled me even more to try to beat listed stocks, sizing up, taking more aggressive positions, being riskier, losing more money. And I just eventually had to sit back and, humble myself and say, you can be defeated by listed stocks. I can't remember if I mentioned this earlier, but I went and I did use some Excel spreadsheets, and I tracked the time of day that I was successful in. And from market open to, let's say 10 a.m., no, not 10 a.m., 1 p.m. Eastern, my win percentage was like 15%. That's awful. That's awful. But my end of day win percentage was about 65, 70%. And I was not profitable. I was not making money in those months. So I spent about a month or two trying to really nail the mornings. Guess what? I lost more money. And when I finally swallowed my pride and cut out the mornings, I was able to find that consistency in September all the way through December. And that's when I was able to take that trial and error period between January and February and really grind, really lay a foundation for myself, a good process that was able to work in all times a day. And really that 2 month period was more for my mental and my expectations and the human emotion side of things, as it really had nothing to do with how I traded these stocks. The technical analysis part, it really didn't have anything to do with it. Mental is so much bigger than anything else.
Yep, 100% agree. Totally.
Swallow your pride, people. Swallow your pride. If you're not good at it, stop trying to beat it all the time. Do what you're good at, build something for yourself, and then you can slowly get into it later. I don't short sell. I don't know anything. I didn't even look at HTZ this week or GNUS. I see those tickers and I'm like, I'll keep it PG. I was going to say some bad words, but F you, man. I just don't want to look at it listed. It's actually harder for me to stay away than it is to dive in. And I think that's where the discipline comes in.
That's impressive. What would you what tips or maybe first step would you give people that are struggling with the mental side? Because you can talk about it all day. I get it. And it's just really hard for a lot of people to, like you said, swallow your pride. So like, is there like a baby step people can take to just start moving in the right direction?
Ooh, that's a great question. You really put me on the spot on that one. I like that. So the way I'm a pretty honest and, you know, straightforward guy. If somebody comes to me and says, I'm not good at listed stocks, I'm doing better with OTCs, I straight up just tell them, stop trading listed stocks. I'm not a very nice guy, I wouldn't say, most of the time. I'm pretty brutally honest with, especially the people I'm mentoring closely. You need to figure it out for yourself. I would say the best way to go about that is to, whatever process you have now, consistently do that for the next week or 2 weeks, 3 weeks, maybe the next month. If you can do that, then analyze the results that you got. If you don't like any of the results, you need a new process. And don't try to fix the problems that you had there. Fix the process and see if you can find some kind of results. Similar to how I did it with my spreadsheets. Couldn't trade in the morning. Let's just nail the part. Just cut the dead weight. Find your dead weight, and instead of trying to force yourself into it and do that, do what you do really well and be an expert at that. And then you can lay the next part of your foundation in your process later. I do the same thing with my players. I have a little guy, really talented player, tries to hit home runs all the time. Kid can't hit a home run. He's not powerful. Steph Curry doesn't try to dunk on Shaq. You know what I mean? Do what you do best and become the best at that. And then you can figure out how to beat people in the future. And for trading, you know, you're beating the market.
All right, Scott. The last segment of this episode is going to be just some plays that should be on people's radar. So we talked about this before, and you brought up TRTC, which I'm going to throw on my screen here. So here's the daily chart. Walk us through your process, what you're looking for, what would make this play for you.
So TRTC is one that I'm actually starting to get pretty excited about. I always start with the daily chart. I look at the volume. I look for abnormal volume. I love to see abnormal volume. If you can scroll out a little bit, actually, if it's possible, do like a 2, 3, 4, 5 year chart, whatever. So I look for abnormal volume candles, and people ask me all the time, what is an abnormal volume? What number does it need to get to? It's relative to the stock. I would say that there are 3 in the last, since October of 2019, there's 3 abnormal volume spikes. 1, 2, and 3. Massive, just the tallest parts of those volume bars. So that's kind of where I'm looking at for this chart to be relevant to me. I want the volume to get back to abnormal volume. We look at a different time frame. We'll go to the intraday chart now. So I know where my abnormal volume is. I know where my support and resistance is. This is a great intraday chart right here. And we just held 15 cents a share, which was beautiful. It's right below breakout. It's a level that's been used before, you know, back here towards, you know, the initial spike. And holding today at under 15 cents a share, I'm looking at my chart on my screen over here, is just beautiful. I look for as many consistencies as I possibly can. I did not want to buy into a day 3 spike, which would have been today. I did not want to buy into day 3. I don't like buying day 3. So I stick to day 1s, and now that we had that consolidation day, I can confidently take the next day 1 move, which would be over 15 cents a share, ideally 16 cents. Maybe adding at 16 if I didn't position size well in the beginning. I don't know yet. I have to manage that position. But I love stock charts that have those initial spikes on massive volume. I actually can't remember if this had a catalyst or not. I don't think it did. So that already is kind of a knock on the stock for me. I look for those 4 buyers. I'm already down 1 buyer. So this one probably wouldn't be a stock that I'm looking to trade up to 50 cents a share. Probably just take the quick flip into the 20 cent, 25 cent area and call it good. But I love this consistency. They had a nice spike, consolidated for, I mean, God knows how long. Is that 2 full weeks?
Really, I mean, consolidation, probably around that 10 cent area. Looks very nice.
That's a long time. And if you could have gotten in on that break of consolidation there, you know, the volume wasn't quite good enough. And I don't know if there were enough eyes on it at the time, but, you know, that's proven to be a decent entry so far. But I'll be watching this one very, very closely for a 15-cent break. And the last thing I'll talk about is I don't get emotionally attached to these stocks. If this thing fails and gets back down to 12 cents a share, 10 cents a share, I could care less. No emotions. You just look at the stock chart. If it works out, it works out. If it doesn't, it doesn't. And I'll analyze this as, you know, tomorrow it'll be on the top of my watch list for sure. But trade with less emotions and you'll be a lot happier in the end, I promise.
I love this chart.
Catalyst comes out on it.
Oh, that'd be nice.
Oh, yeah, I'll be slapping that for 30 cents a share. I'll be excited about that. Maybe not 30. That seems a little bit ambitious still, but I'll be much more convicted in this position if I have all 4 of my buyers.
Tomorrow, if it breaks over the 15 level, what would you be risking?
What would I be risking? It depends on what the gap up is. If the gap up was strong at like, let's say they put a big bid in there at 14.5. I didn't watch it super closely. Just by looking over here, it doesn't look like we have too big a size. But let's say at the open they put a 200,000 share bidder at 14.5, and that's the low of the day. And then we break out over 15. Probably risk that 14.5 level. I'm looking for key levels that stocks prove to me that they can hold. I always make sure that they prove to me. So if you're just looking at this intraday chart right here, ask yourself, where did this stock chart prove that it can hold the most consistently? The answer would be 10 cents a share. I didn't decide that. The stock chart did. I'm just looking at it. So I'm going to do the same thing on a shorter time frame tomorrow or Friday, whenever this play actually is on. If it is on, I'll be looking for that, something that stock proves to me can hold. If I miss the stock, I don't get 15, maybe it gaps to 16.5, then maybe I'll wait for the dip and I'll see if it can prove that it can hold a certain level. Whether it's 15.5 or 16.6 or 16.1, I could care less. I'm just going to look at the chart, and then maybe I'll find a thesis off of that and a good risk reward trade for further upside. But I have a lot of different packages, a lot of different ways to trade these stocks. I don't chase. I always wait for them to come back down to levels, and I let them prove themselves and give me some structure. I need structure in OTC trading personally.
I love it. That's everything I had. Do you boys have anything else before we close out?
I'm good to go.
Awesome. I feel like I talked forever, man.
Nah, you did great. Thanks for coming on. I learned a ton. I love your mindset, and I think the listeners will too. So excited to get this out tomorrow.
I appreciate you guys having me on. It was super fun. I was pretty stoked when I got the message about it. So keep working hard, boys. Thanks for showing me up this week big time with my no profits. But Jack, again, congratulations. You guys are all hitting benchmarks 200K, 250K. So it's a pleasure to be on with traders like yourselves.